Hey everybody, today is Wednesday, the 7th of February, 2024. This is Brian Shannon from Alphatrends, and we have another new all-time high here for the S&P 500. A lot of people have been talking about divergences, things like, but it's up on lighter volume, or seasonally, it's typically weak in February, and new highs or the advanced decline or whatever they are talking about is saying that the market shouldn't be at new all-time highs. But guess what? It is at new all-time highs, and the only thing that matters at the end of the day is price action. That's why I always repeat, only price pays. We started this week with a little bit of profit taking, but that pattern of lower highs quickly was erased. We held above the 5-day moving average. The 5-day moving average has been rising, so there's been no reason to be bearish on the S&P 500. If the market trend changes, then I'll get bearish. Only then. I don't care if it's up on light volume. Volume doesn't matter. You can't take volume to the bank. You take price to the bank. The NASDAQ, another new all-time high as well. Yesterday we saw, actually, pretty much all this week, we've seen test of this little band of support near 424.5, 425, and it has held up. And with a rising 5-day moving average and the anchor from the beginning of the month, we're above all those. We're above a rising 20-day moving average. We're above a 50-day moving average. We're in a bull market. Bull markets are supposed to go higher. Occasionally they get pullbacks, and when they do, I step to the sidelines and get back in when it's all clear. It looks like it's all clear. For those of you who look at patterns, is this an inverted head and shoulders pattern with this the neckline? Call it whatever you want. The price pattern is suggesting further upside. We've got lighter volume, but only price pays. On the opposite side, we have the Russell 2000, which continues to be below the declining 5-day moving average. Tomorrow, that 5-day moving average will start to flatten out as we get rid of this data. This line right here is where we were 5 days ago. On a 30-minute chart, each 30-minute period, that line moves forward 1 bar as it's replaced with a new bar over here. And that's what allows us to anticipate the direction of the 5-day moving average. Let's say that this Russell does this all day tomorrow. Well, then later in the day, you're going to see the 5-day moving average not at that slope, but continue to decline because we'll be getting rid of this data. So it's neutralizing at best near the rising 50-day moving average. When we look at the weekly chart, it still looks like it has the potential to be bullish, but it's not bullish yet. Wait for the evidence that the buyers are in control. There's no reason to be just throwing your money away trying to guess where the low will be. Let's talk about Bitcoin for a moment. I've mentioned that numerous times here in these videos and just the last couple days on Twitter, and it is finally breaking free of that high, the anchor from the high, that is, of when the ETFs were finally approved. So let's look at that on one of these ETFs. There's about a dozen of them that were approved all on the same day. I would say you're good to trade any of them except for the one by the ARK fund. Why give them any more money? She was called the world's worst destroyer of wealth. And, it doesn't take any special skill to run this type of fund. It simply mirrors what Bitcoin does. So why pay someone 80 basis points to do that for you? Anyways, here is why Bitcoin is up. It is up because it is holding above the year-to-date. It's not the year-to-date, but the anchored volume weighted average price from the approval of the ETFs. We fought it over here and it was extended. Then we saw the 5-day moving average flatten out. It broke above this level that I've been talking about, and now the buyers are in control. The way I manage risk is a worst case stop would go under here if you're in the IBIT. If you wanted to be a little bit more aggressive, then under there. Perhaps you put half of your stop under this level, half of your stop under that level. Either way, I am a trader, so I'm not going to say just buy it and YOLO it and all that stuff that people say, or HODL rather, but use common sense. Be involved when the price action dictates. I don't have a price target other than higher. Higher is where the market will settle out when the market wants to. Maybe it goes like this and pulls back deeply in a couple days. I'll get out of at least half of it there. Maybe it continues to just go up to new all-time highs. I'm prepared for anything. I'm not locked into any belief. That's why I'm a trader. As I've been mentioning, this is not a double top. A lot of people are calling this a double top in the SMH, and it simply is not until we break below this level. Once we break below that level, then we have a double top. I spoke top. I spoke about that on Trader TV yesterday with Sean. If you didn't catch that, it is recorded as well. But, some people yesterday were convinced it was a double top. And where did we pull back to? We pulled right back to the month-to-date anchored volume weighted average price. We pulled back just above the rising 5-day moving average and the middle of this range that this has been in. This has been resistance over here, support, resistance, support, and once again support. The buyers are in control. They have control, and we'll wait for the sellers to take control. If we see something like this again, we'll move to the sidelines and not call a top. Instead, say it's a pullback on an intermediate term time frame within a major bull market, which is continuing to make new all-time highs. People have been trying to pick the tops all along in here. I'll know the top well after the fact. But I won't get chopped up trying to pick the top over and over again and lose my money needlessly. Biotechs continue to be very choppy in here. This is what I traced in yesterday for subscribers saying maybe it can do something like this. But all of these lines, what I'm showing here is the choppiness of this biotech index and how choppy they are. And, we still have that declining 5-day moving average. You can see this morning it tried to flatten out as we got rid of this. But similar to what we were just talking about with the Russell 2000, later in the day as we got rid of this data and replaced it with this data, the 5-day moving average is still declining. So, looking at this daily time frame, realistically, it's just in a range here, and perhaps it can continue to tighten up in that range, and then the buyers can gain control because there's a very bullish look to the longer term chart. But maybe it's going to need something like this. Maybe it's going to need a shakeout first, and I don't want to be guessing and then buying in here at 88, seeing it drop down to 80 or 82. It's not a prediction, but it's possible. I'd want to be on the sidelines and wait for the buyers to take control before I actually get involved. And now's not the time yet. I'll know, the market will tell me when it's time. I'm not here to predict and say it's going to be next week or because of some conference or earnings reported on a biotech stock. Financials are quite resilient here. They continue to hold up. I don't trade them, so I'm not going to talk about them. Energy names, they're still holding up underneath the declining 200-day moving average, underneath the anchor from last year's high. So all in all, most stocks are going higher. We're in a bullish environment, and that's what matters.